Welcome to Edison Open House Global Healthcare 2021. In this session, we're going to be highlighting the work of Ergomed. It's a company which provides specialist pharmaceutical services to pharma and biotech. With me is their executive chairman, Miroslav Reljanovic. Miroslav, welcome.
Thank you very much. Thank you for inviting me.
First of all, just tell us briefly about Ergomed. Just give us the top line of what it does and why it does it.
Yeah, as you stated in your introductory words, we are specialized pharmaceutical service company. What does it mean specialized? We are basically engaged in very specialized services in drug development in the area of rare diseases and oncology. This is our specialization, and I'm going to tell a little more about this area of research, which is obviously very exciting. And the other part of the business is dealing with safety of the drugs, which are on the market, which are prescribed, what we use in our everyday life, as well as drugs which are in the development, in R&D. And this system of collecting, analyzing, sorting out, and reporting these safety adverse events is called pharmacovigilance. So basically, Ergomed has two divisions. One is dealing with development of new drugs in the area of rare diseases and oncology, and the other is managing the safety aspects of the drugs which are in the development or on the market. That's what we do.
You've just issued your trading update for 2020. Can you walk us through the main points?
Yeah, so basically, I would like to state firstly that we are very pleased with the results of our financial performance during last year, which we all know was extremely challenging for any business, including our business. Yeah, so we managed to exercise year on year further very attractive growth in our revenue. So we've been trading in line with market expectation of about £86 million revenue, which is about 26% higher than 2019. And I'm very pleased also to state that our EBITDA is ahead of market expectation, which is particularly attractive, from the point of view that we had a profit upgrade in summer last year, and obviously the market expectations have been increased quite significantly, and we are trading even ahead of these increased expectations. So we are very pleased with these results. In addition to that, I would like to stress that our order book is very strong. So we are about 50% higher with our order book in the range of 190 millions than in this time last year. And a very significant part of that comes from our organic growth, and some of that order book came from our US acquisitions.
It's been an exceptionally difficult year in 2020, and yet you've done extraordinarily well. Why have you done so well, particularly given that a lot of your work is in clinical trials where recruitment has been very difficult?
Yeah, that's really, interesting question. It's a little complex one. Basically, the big part of our business deals with safety of the drugs, system called pharmacovigilance, and this is extremely robust and robust service, which cannot stop in any crisis or pandemic or whatever, because this is assessment of safety data which are coming from the market. So the only real challenge was during pandemic, are we going to be able to process this data from remote working practice, not being in the offices? Would our technology function well? And it proved that we've been very robust, we've been well prepared, and we've been able to process the data in a very efficient way. In addition, we got some more even safety data than we would be getting usually because of pandemic, because of a lot of healthy concerns, going around the world, So we got even some increased number of cases, and we had very efficient system of managing. Regarding clinical research, we experienced some issues with the monitoring of our trials in hospitals. Our so-called clinical monitoring colleagues could not go into hospital, especially in Q2. But due to our model where we support clinical sites with so-called site managers, who are in the hospitals, we've been able to maintain communication with the hospital staff even during this toughest period of lockdown, and being able to continue the trials going uninterrupted. Yeah. And when things got easier, during the summer, we succeed to pick up on that. So our, for example, revenue in clinical research business increased for 11% from H1 to H2, which is a good sign, that we've been able to do more work, particularly in monitoring. Yeah.
Now, you made a very significant US acquisition last year. Tell us a bit more about that.
Yes, that's extremely important, that we succeeded to execute on our strategy, what we set a year before in 2019, that we want to expand in US market. This is absolutely critically important for the company, because US market is the biggest pharmaceutical and drug development market in the world. We need to be aware that 50% of any clinical trials which starts in the world start in the United States. Yeah. So this is important from operational point of view. From the other point of view as well, the investment which comes from US is probably even higher than 50%. So it's very important to be robustly present there. And we succeeded to acquire in January a company called Ashfield Pharmacovigilance in Raleigh, North Carolina. Succeeded to integrate it well during first half of the year. And also we've been really working very hard on acquiring a specialized clinical research business during last year in order to complement with our particularly strong European clinical research services. So we are really pleased and proud that we succeeded to manage 2 US acquisitions, which are really strategically important for us and for business going forward in pandemic year, and we can build on that basis now. Yeah.
So the newest business is called MedSource, and you've also got Ashfield Pharmacovigilance. You've had Ashfield for a year or so now. How has that integration into your business gone?
Yes, integration went really very well. I'm very happy that most of our colleagues in this business are with us. They stayed with the company, which is always probably the best sign of the business. In addition to that, we've been winning significant amount of new business in the United States due to that presence now there. So it helped us from the sales perspective, and it helped us also being closer to our clients, which are more than 50% from United States. Yeah, it really strengthened our position there. We got about $12 million in revenue through that business. We got backlog, but most importantly, we got a new sales achievements during last year. Yeah.
2 last year. Will you be doing more M&A in the near future? What kind of deals might we expect?
Yeah, before coming to this question, I would just like to stress the importance of MedSource acquisition in the context of clinical research. That acquisition is very important due to that strength and importance of US market in developing new drugs. With that acquisition, with acquisition of MedSource, who brings about 130 colleagues, most of them are United States, who brings more than 20 years of track record of excellent research with more than 200 trials in oncology, which really strengthen our portfolio of trials we have done up to now, puts us in a much stronger position business-wise for business going forward, yeah, for cross-selling between pharmacovigilance and clinical research business, but particularly being more robust in our sales efforts in the United States. And coming to the question, what come next? I would like to state that our strategy is to grow organically, very attractively. What we have shown since IPO in 2014, we've been growing over 20% year on year, which is exceptional. So we are very, very committed to organic growth. But in addition to that, we would like to add acquisitions which will be strategic, like these two, and which would augment this very strong organic growth. That's how we look at the acquisitions. Yeah. They should support strategy, and they should support very, very strong already organic growth.
Now, we've mentioned already that you as a company have been particularly resilient during the pandemic. But do you think, having seen what we've seen during COVID, that there are any long-term structural challenges for the CRO business? Or do you expect the market to return to its, business as usual, as it were, as it was before the pandemic?
In fact, the good news for our business, which is drug development and pharmaceutical business, is that in fact the level of investment in biotech increased last year, which is very interesting and which is kind of understandable due to big concern about the health generally, not just COVID. Yeah. So basically, more investment means more development. So basically, we expect our business to be really in a good shape. And we've seen during last year that we've been able to win significant amount of work. We have not seen any decrease in winning rate, last year. And in fact, with this strengthening in the US, we expect to embark on that very positive trend. So basically, we expect more after all these challenges,
So the future for Ergomed is looking bright.
Yes, yeah, I think the future for Ergomed looks very bright. Yeah, we basically restructured our business over the last 2 years toward a fully focused service business. We unlocked basically our potential with multiple profit upgrades. We had 4 profit upgrades in last 2 years, which is extremely significant, I believe. And we have extremely strong and robust basis for further growth, regarding our order book, regarding our global infrastructure with our 1,200 employees worldwide. So our position is very strong to penetrate to global market as a leading specialized company in the areas of oncology, rare diseases, and pharmacovigilance. And that would be obviously supported by acquisition in addition to organic growth. This acquisition will come in the area of Asia, for example, which is a very important and growing market today, and also strengthening further US and some European regions. Yeah.
Miroslav Reljanovic, thank you so much for telling us so much about Ergomed and so eloquently. Thank you.
Thank you very much. Thank you.